All right, so this message is for anyone who's under the age of 40 and you don't have an investing account, you haven't started investing, or you have started investing, right? But you're trying to find other ways to invest. So, in this video, I'm going to explain to you what I would do if I have less than $500, less than $1,000, less than $5,000, all that fun jazz. Very first thing you're going to need to do is download a broker. I prefer Robinhood. There are many other brokers out there, but if you're starting out, you want one of those newer generation brokers. If you're just starting out, you don't know what strategy is, you don't know, how to buy certain stuff or at least whatever. I believe Robinhood is a great platform to learn on. Also, with that being said, once you download the Robinhood account, the next thing you're gonna need to do is register. Duh. Like, what the freak? Like, register the account, baby. Come on now. And then last but not least, you're gonna have to deposit. Well, it's not actually last but not least, but actually what you're gonna have to do is deposit some money. Once you deposit some money, you're going to find some stocks that you already are investing in. For example, if you have an iPhone, go buy some iPhone. Go buy some Apple stocks. If you like Coca-Cola, Dr. Pepper, go buy those stocks. If you like to travel, go buy some travel stocks. If your money is in a bank, go buy some bank stocks. So those are very basic ways to like think about what stocks to buy. It gets more into depth as far as the options that you guys have to buy, but to start out generally, that's the mindset to have. Like, what are you already consuming already? And are these brands, are these companies already being publicly traded? So my name is Sean Ali Malvis, and on this journey, I'm going to explain to you guys what I do as far as buying stocks. How do I buy stocks, and what's my thought process, and why maybe you should kind of take the same style and make it your own. So I started this journey on November 13th, 2025. And when I first started the journey, I was just only depositing about $5 into the account every week, buying only buying $1 worth of fractional stocks every single day that the market presented itself. And then later I graduated at about $20. And then now, yes, the account is sitting at $5,000. I did put $5,000 in. But that's to show you guys other strategies for those that are a little bit more advanced, those that do have a little bit more money into their account. But I'm not going to steer away from what I started initially. So, ladies and gentlemen, today is a major red day. Everything is basically red. So, you know what that means. We're going to buy. We're going to get some. Actually, I'm not even going to buy $1 worth of Bank of America because I got to play for Bank of America later. I gotta play for Bank of America later, but we're gonna add some SPY. Definitely add some SPY here. It's not gonna do much to it, but hey, we get in there. We get in there. Oh, it dropped me a lot. I like that. Dropped me a lot. My cost average. So the one thing when buying stocks is I like to look at my cost average and I like to see where the price of the stock is at. And if the price is under my my cost average, that means buy for me at least. Why? Because I use this like gas theory, like you're buying gas, right? If you bought gas at one price and the following week it's cheaper, wouldn't that entice you to buy more? Like, wouldn't that entice you to keep buying, right? Like, you wouldn't shy away from buying a product that you use and it's on discount. Yeah, I'm gonna add some Caterpillar. It's gonna increase my average cost, but that's okay. Caterpillar is red. We want to get some on its way down. $4, not too bad. Get some on its way down. Lows. I think we gotta add some lows. Nvidia. Add some from Nvidia. Obviously gonna raise my average cost, but that's okay. Nvidia had a pop yesterday. Well, tech had a whole pop yesterday. So just giving back away what we got yesterday, which is fine. Netflix is still crushing it. We're gonna get some Microsoft here. I have a few plays. Stay to the end, ladies and gentlemen. I have a few plays to give to you guys. These are a little bit more intricate plays. So I got some plays to give to you guys. So definitely stay to the end of the video so you guys can see the plays that I'm doing. We got some Microsoft. We're gonna get some Google. Definitely get some Google, silver, gold, and copper. Silver, gold, and copper. We're gonna get everything else. Dollar, make you holla. Have some silver here. Get some silver. While the market is red today, while we can get into more positions today. Copper. Definitely add some copper in here. Definitely add some copper in here. And then we got, what's next one? Copper. Okay, cool. So we added everything. Another great thing, guys, I wanted to explain here as far as why Robinhood is great, and I'm sure probably other brokers have this as well. But with Robinhood, if you want to do this journey and you're like, man, I don't want to wake up every single morning and buy these stocks and log in and buy this and buy that. Look right here. There's reoccurring buying. So like I can go to a stock here and I can set up reoccurring buying. So probably is like here somewhere. So you're gonna go here, buy order, recurring investment. Look at that, recurring investment. I could pick what day it starts. I could pick the frequency. So every week, every 2 weeks, every month. Look at your options. So let's say you didn't want to like log in every single day. You can put it in every day in the market right here. You can put in every Monday, every 2 weeks, every month, and have it on an automatic process. So literally Robinhood gives you no excuse why you cannot start invest. Like if you don't want to log in, cool. Have it come out automatically. And then when you do have a chance to log in and see what's going on, you can make your own actions based on that. So that's one thing I wanted to give you. Next thing I wanted to give you here, ladies and gentlemen, yesterday I bought 100 shares of Intel, and Intel went up. Now what happened was I sold a covered call, meaning I sold insurance on my profits. What does that mean? Yesterday when I bought Intel for $46.65, Intel ripped yesterday up to like $48. I was up like at one point like $200 and change. Now what I did was I sold a covered call. I sold a call. This is an option strategy. I sold a call. So what does that mean? There is a option chain, and these option chains represent the stock. And for the most part, the value of the option chain represents the appreciation value plus a little bit of premium per se. Like for example here, 42.50, and the difference is $4.90. So the difference between here, 46 and 15, is about $46 and change. So each premium is like the difference between where the stock prices is at plus a little bit more. So what happened was the stock went up to 48 and the premiums went up. So when the premiums went up, everything went up with it. So instead of most people, when they do this covered call strategy, what they would do is they would buy the stock and they would get a premium, a strike price higher than the stock. So they would get this, let's say. This would give me $26 at the end of expiration, meaning that if the stock stays below $47.50, I get to keep my 100 shares and I get to keep the $25 credit. But same here. Let's look at it here. Remember, I bought the stock for 46.65. So right here, if I were to have this contract I would get $86 for this contract. So if the stock is sold at $46, but I got $86 for it, technically I sold it for $46.86, which is higher than what I got it for. It's not much, but it's higher. And in this strategy, I'm protecting my gain. I'm protecting my money. I don't care about gaining like these credit every single week, because as you guys can see here, the stock is down. The stock is down. I'm down today. Look, yesterday's return 208. Today's return negative 75. So I'm down today. But look, that money is right here. That money is right here in this contract. So let me explain something to you guys. My average cost is $46.65. My contract that I choose is the $45 strike price. If tomorrow Intel is above $45, I'm obligated to sell Intel at $45 regardless of where the price is. So tomorrow, let's say Intel rips to 50 bucks. I have to sell my Intel for $45. Now, if I'm obligated to sell, right, my break even would now be 48.65, meaning that if I sell out of this, I'm really selling it for 48.65. Why? Because I'm selling it for the $45 strike price, but I received a 365 credit. So what you want to do is 45 plus 365 equals 48.65, and I bought it for 46.65. So what does that mean? I make $200 even if this stock goes down. This stock can go down to $45, but I'm still going to make this $300. So I made profit on a losing asset. Like, that's not talked a lot. That's not talked a lot as much with the game. Like, look at this. This is my biggest loser right now. This is my biggest loser. Look, I'm down $82, but look at the portfolio. Look at the portfolio. I'm only down $14, $13. Like, and everything else is damn near red. But because I got the premium, because I sold the covered call, I'm hedging my profits. I'm going to do the next strategy with this one right here. I'm going to do it with Bank of America. So we're going to buy 100 shares of Bank of America right now. Shares. We're going to buy 100 shares of Bank of America. Now, this is a recommendation that I would recommend you don't do. Right now, I am on leverage. I am using borrowed money. My account says 5,400. My buying power says another 6,000, but I got 4,500 right here. So realistically, I got about like $10,000 of buying power with only 5,000. So you're using margin. So when you're using margin, this is something you really want to be careful. You don't want to get into too much margin, especially when the market is the way it is, where in a war or battling and stuff like that. So we could easily melt. We could have easy melt days. So definitely want to be careful when using too much leverage. But in this strategy right now, I'm going to buy 100 shares of Bank of America. I should buy that dollar. Let me buy that dollar just so I got that already in there. Wait, yep, we got the dollar. Cool. So we got the Bank of America. We made a play. Okay, cool. Now the shares. We're gonna buy 100 shares. 100 shares of Bank of America for $47,000 or $4,700. Buy. What I should have done is probably buy in 50s or 25s. I'm gonna do that for the next strategy. So, ladies and gentlemen, just bought 100 shares of Bank of America basically for $47.23. So right here, I'm going to go on the option chain, and I'm going to see where can I put my money, and if the stock goes down, I like lower the loss, what the potential loss could be, or I win the trade, but I don't maximize the profits. For example, here, let's say I get this one right here. This one will give me 46.50 plus 96. That'll give me like 47.46. So if I pick this one and then the cost is above 46.56, tomorrow I'll make about like 30, 40 bucks. If it goes down under, I keep the 96, and I keep my 100 shares. So that's that's my gameplay. What I'm going to do is wait to like 12, see if this thing rips, if we come back up a little bit. Because if we come back up, what will happen is these strikes, these premiums, they'll go up. So I'm just gonna wait a little bit, see if the market has a bounce. If the market doesn't have a bounce, cool, whatever. I'll just protect myself on a covered call. Um, this again. This is for people second level, third level of understanding stocks. This isn't a beginner strategy. So if you don't understand, great. Like it's okay. You will get it eventually. But don't rush the process. Even if you have this money, this isn't financial advice. This isn't me telling you what to do. This is just showing me strategies that you could do if you have less than $5,000. So my goal here is hoping that these premiums go up a little bit. I sell it, and then we wait for tomorrow. Same thing with Intel right now. Intel, I'm so excited for Intel. So I got this $45 strike price. So whatever Intel decides to do, like for example, look, let me break it down to you guys. Let me break this down to you guys. I have this right here. I'm up $196 on it, but I'm down here $75. So technically, I could buy this back, sell my 100 shares, and I would be up $120. I could do that right now and take my $120. My risk that I'm risking per se is keeping Intel, and then tomorrow it drops below $45. So now I would be stuck with the 100 shares, but I get the $300 credit. Ideal is if it does drop, it stays within 44. It doesn't go below 44. That would be ideal. Because if it goes to like 44, still with my $300 credit, I would still be in profit. So that would be ideal, but hey, we can't control the market. We can only react and see what it does, and then just go from there, ladies and gentlemen. These videos are going to be a little bit longer because there are more strategies now. There's more talks. There's more information. So thank you guys for staying to the end of the video, watching the whole thing. If you guys aren't already following me on my TikTok and my Instagram, go ahead and follow me on TikTok and Instagram at Strictly Financial. And today is Thursday, so that means tomorrow's Friday. So we'll talk tomorrow, ladies and gentlemen. Have a good one.